Hey everybody, welcome back to Swing Trading. Mike Fairborn here. Folks, we'll see if markets can get its gains back like it did on Monday. Let's see if we can see some strength coming back into the markets right now. What we've been seeing more recently with a high VIX though is a lot of the stocks really doing exactly what the S&P 500 or the Nasdaq, they both look very similar in their charts, have been doing. And that trend is down. So we still want to take a look today at some of the potential for bear flags. But there are some areas, some silver linings for upside moves, and I want to address those too. I've gone through a number of different stocks. I want to address each of those today, but it's kind of a split market once again. Very few on the upside, but there are some distinct ones, and then of course we've got some on the downside as well to keep an eye on. All right, folks. Well, I'd like to welcome you all to our chat. It's good to have you all here. You can join Cam and I'm joining the chat. Good friend of mine, Cameron May. You can join us both on X. His handle is Cameron May CS, and mine is Mike Fairborn CS. Look forward to having you on board if you're not already, and definitely let us know if you follow us, so we could follow you back. So there are a few people that are on board, and we just need to know, who's with us, so we can follow you too. But having said that, let's dive into some disclosures to get going here. See what we've got. All right. Well, information here is for general information purposes only, and I wanted to state that options carry a high level of risk, are not suitable for all investors. We'll be looking at some of those today. Specifically, spread trading must be done in a margin account. Multiple leg option strategies will involve multiple transaction costs. Okay, as we look at that there. In addition, short options can be assigned at any time up to expiration, regardless of the in-the-money amount. An ITM option does have a high risk of being assigned early. We've got some other points here. A short put risks purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. Now, Schwab does not recommend the use of technical analysis as sole means of investment research, and the paper money software application is for educational purposes only. Investing involves risks, including loss of principal. There's no guarantee that the execution of a stop order will be at or near the stop price. Past performance is no guarantee of future results. And so having said that, let's move on over to to our markets, and we'll take a look and see what we've got here, folks. Just taking a quick brief look at the S&P 500, and something we always like to do in this class. It's very important to be on the right side of the market, or at least where markets are, different areas of the market are showing strength, maybe different sectors, indices are showing strength. A lot of times we can look at the upside, but collectively, the S&P 500, low or low, that's a new low. That's a lower high. And we'll go ahead and put another lower high here. Perhaps, we don't know. It's very interesting. We'll see if the market can come back to gains that it had seen earlier in the week. We don't know what we're going to get. We had a good day Monday, but this is a lower low here, and like I said, possibly a lower high as well. One thing just to briefly note with the markets here, this strong pullback that we had has bounced back after a huge day within the Dow that we had in the just SPX as well, you could see, but then we've gotten to a tighter channel. So what we're basically seeing as this is playing out right here at a resistance level, potential resistance, it was prior highs, big gap down here. We kind of stopped near this level, right around 5,500. If we just go here, follow me over, would you? Just over into one shorter time frame. I've got these all set up. I got a daily 30 and a 5-minute, boom, right there to the right. What does that look like? Possibly a little bit of a triangle pattern. I was looking at this earlier today as I was covering a class for Ben this morning, but look at this. We're getting this kind of setting up, and we may break out or we may break down. Let me ask you all this. But by the way, prices are getting incredibly tight right here. Let me ask you all this. What is the direction of the longer term trend? There's a little hint. We just looked at it. We just looked at it. We put it on the chart. Sometimes these price patterns, oftentimes, they'll go in the direction of the trend. Folks, at the bare minimum, take a look at the trend. At the bare minimum, do that. Okay? we at least have to do that. We need to know what's happening on a longer term scale. Are we getting lower lows and lower highs? Are we getting higher highs and higher lows? Is the trend up? Conversely, what have we been seeing here? That's coming off a low, right? So the risk side, according to many traders, they would say there's probably more risk, although it's been pretty tight, it's been holding its gains, there may be more risk to the downside. There may be. That's the question. It is tight, and it looks a little bit like a bull flag over here on a short-term basis. Take a look. It's getting tighter and tighter. It's like a pennant. We'll refer to that as like a pennant pattern, which is where you get the flag, you get the pull of a flag, and then you get this kind of sideways triangle here. But will it break up? That's the question. The great thing is we have some trend lines to help us out with that. And you guys have probably seen me go through this before, but just in case you hadn't, I think these are really interesting levels to keep an eye on. I'm going to kind of mirror a trend line here and put it over here. Like, well, you know what? Let's just do this. Let's keep the same trend line. And once I have these in place, I'm going to right click and I'm going to go down here, create alert withdrawing. There is a trend line there. And that is at or below. I want to know if it goes at or below. I'm just going to say breakdown. We're starting off early here, I know, but we're getting to the point of the apex of the triangle. So I will be alerted on screen. I'll be text this message if it does break out. I'm also going to say right click here and create an alert with this drawing. Crosses above. Break up. Break out, I should say. Break out, question mark. Something like that. And that's really kind of the key guide we're going to be looking for in terms of a short-term move. Now, why am I taking so much time on this? You know what we saw with the markets? When the markets began to break lower here, just parking this in the back of our mind with the swing trade, right? 3 to 10 days. We're just trying to get these little moves in the market. For example, we talked a little bit about this bear flag. It didn't hit while we were in class, but there were indications of a break here, a T1 test, came back up here, and then of course we got a T2 test down here that ended up being a bear flag. Now, what we've been seeing is that when the markets dip, especially with a high VIX, almost everything in the market dips with it. So that's why I'm putting these trend lines on right now with alerts, because we're literally getting into that point here, which could start the move up or down. Okay, that's the question. We don't know. The risk, we could say, with the trend would be going to the downside. But that's just the key point that I wanted to focus in on right now. I do have this longer term support level that we bounced off of. This is both a culmination of weekly Fibonacci's at the 50 and the 61.8. So really huge levels at the Fibonacci point. In terms of, let's just show you real quick so you got it in your mind. But SPX, there you go. The Fibonacci 50 and the 50%, which is off this low here. I'll do it real quick just so we're all on board here. I'm going to use the Fibonacci extension tool right here. Let's click on that. Right off the closing prices here. We had a lot of touch points there, a lot of touch points here. I click one time, I click again. Oh, shoot. I'm sorry, I did the wrong. This is the one I wanted to use. Right here. Just the standard Fibonacci. It's the percentage right there. Okay? So click, pull it up, 50%. If I draw one off this level here, you're going to get another one that's right at around 61.8. Huge levels. It was very interesting that that's where the market found a point to bounce, which is coming off these big levels, right, that a lot of traders will look at. They can be big levels. 50%, clearly the 50 is a big one. There's another 61.8 off of a shorter term run right there. So I don't know if that would be support if in fact we do come back down. But if we did, and this is a bear flag pattern right here with the triangle coming down, what do we call this? That is our target one. Target one getting hit, which is right towards that bottom. And like I said, there's a long-term support over here at that point. So just keep this in mind, around 4,900, below, you know, it's a little bit below 5,000. All right. So we've got that. By the way, you know, the trade that we looked at last week, I'm going to hit this just a second. Before I do that, folks, really important. We're in a very, very volatile market right now. Anytime the VIX is as high as it's been, and traditionally, if we get that VIX literally between 25. Now, a lot of people have written about this and discussed it, but between 25 to 30 or higher. So really just, sometimes they'll use 25. We're above 25 now. Sometimes they'll use 30. But above this range or higher, it's very, very difficult to even see prices pulling back, regular prices that will bounce off a 20-day moving average or a 30-day moving average. Case in point, a quick look at the SPX right now. Like say, for example, the 10-period moving average or the 20, whatever you want to pull up, the volatility is so sharp and so strong that we might just break right through it, which is exactly what happened. When it goes, it can go very, very quick. It can go sharp. So when volatility is a little bit lower here, we were getting some touch points. But when the VIX really extends high, you've got to be very careful. It will break through support and resistance levels very, very quickly. That's why I'm using like long-term weekly fibs for like potentially even stronger support out there. That's where we bounced off of. We shall see. But just a quick note on that. When the VIX is high, it gets very, very tricky. And also, when the VIX, if it does start to bounce, which you could see right here, there is a support level here on that VIX. If we do bounce up even a little bit, what does that mean for the markets? The possibility of a T1 test or at least a breakdown, and a lot of companies could follow it. Last week, we looked at this potential breakdown here on ROST. The very, very next day, we were looking at a bear flag over here. Prices were coming down. It had retracement up here right to resistance. Had a hammer pattern, or I should say a shooting star, and we came right back down. We broke below our 10. We were looking for a T1 retracement, but then the pause on reciprocal tariffs took place and it exploded higher, and it went with the market. It even cleared this high over here too, which is very interesting. So I hate to whipsaw us, but to be honest with you, it did hit a new high, and it looks like a little bit of a flag pattern. If it comes over here, it might flag. So it's very, very interesting. Most of the stocks in the market do not look like this. They look quite weak. But I wanted to take a look first off at the upside, show you what's really moving on the upside. I want to start off actually with a gold and silver XAU index, which is very, very similar to gold. So we're still seeing some strength in gold in here. We have a big gap. So it looks like this looks very familiar. It looks very similar to, let's say, a gold chart. And you can see it just in terms of looking at the index, we're getting higher highs and higher lows. This is one group that I thought was doing very, very, it's showing a lot of strength, right? So if gold itself is higher priced, then gold stocks could do better over earnings, all else equal, because they're getting more revenues with a higher gold price. They're mining it out of the ground. They're getting more out of it. A company we had been tracking, we did play it one time. I'm looking at it again over here. It is NEM. So one of the first ones I want to look at today is Newmont Mining. And I'm going to show you how we could set something like this up. Now, looking at Newmont, I'm going to zoom in on it. We did have a previous run up that was actually met in terms of a flag pattern. Let me just draw with these lines here. Right here, we had a run up here, a pullback, and this additional line is just a retracement up. So it did hit not just a T1, which we initially looked at, but it also hit the T2. Okay, that's the flag pattern. We were looking at the trend here. We were looking at the price of gold, and it continues to rise higher. Now, if the market's showing risk of pulling down or the VIX bouncing, and both could have a similar outcome, right? What we could be looking at here is the possibility of gold extending higher. Now, if we zoom in on gold here, on this move with NEM, higher gold prices, it could mean better earnings. Of course, I did want to point this out. There are earnings right here, and we don't know what's going to happen with earnings, so that's a risk factor. It does put us, we click here. Now let's do this. Yeah. How many days till earnings? Normally the swing trades are 3 to 5 days, 3 to 10 days in terms of the bull flags that we've been looking at. So the possibility again of maybe another follow through. We're holding very well in terms of prices. We're holding very, very tight here. and perhaps we could break out. We could break out very soon. We don't know when that will occur. You guys, as we look at these patterns, we have talked in the past about gaps. Gaps show extraordinary strength. They can. One of the gaps, a couple of the key gaps do. We have a big gap in here. This could be perhaps a measurement gap. And so I want to show you what the retracement level of the measurement gap looks like with such a sharp move. Before I do that, I want to go back into it here. NEN, here's Newmont. And there are prior highs over here. Gold is well beyond this level. This is one of the laggards in the group. And so it's been kind of holding down despite gold prices going higher, but recent strength has been really, really good. Okay, here is what I wanted to point out to you in terms of the gap trade, a measurement gap. A measurement gap is used. Let me get that line off the screen. There we go. Like this. Here's the low. You measure off the low to this high, to that high move. And then you take the bottom of that run. You measure the same distance up. So it's just a measured move from here to here. If I kind of eyeball that, well, I have a good sense of where that's going to take me to, about right here. Okay. So just above 60, maybe close to the 62 mark, perhaps close to it, approximately 62. If in fact it does do a measured move. Now it does set up fairly well with a possible flag pattern right here too, right? Let's look at the intraday as it's holding this up. Here's a 30-minute chart on it. Do you see it now? Do you see how well it's holding the price action? Very, very, very well. In fact, this whole move that we had from the bottom, there's your gap, suggesting the possibility of a bigger run up, but there's your big run, and then here's your consolidation. Very, very small. I mean, look at the size of the price moves. Just what you'd like to see in a bull flag. Very strong to the upside. We'll use a different color here to highlight this. Very, incredibly tight, folks. The sideways range using a 30-minute chart. Those 30-minute charts are helpful to kind of see what's been going on. If I were to look at this here, let's just stop for a second. Now, you guys have, we've looked at a few different things, but what might we be looking at here for the possibility of the start of a move higher? If you look at a chart like this in terms of a bull flag, let's say there is projection potential to the upside. The flag suggests that anyways. The measured gap mentions, or potentially kind of highlights or illustrates that could happen as well. Couple lines. I'm going to pull up my, yes, you got it. Okay, so here we go. Look at this. What about a little bit of a sideways, little trend line coming through here? Now, I'm on a 30-minute chart. We're just barely breaking above it right now. But to get a little bit more insight, isn't there a high right there? There's a high. There's one more high right there. That's the high point. This is just the trend line coming down. Sometimes when you get a trend line break, it's indicative of a possible break higher where the trend itself can go up. That's what the trend line can kind of foretell sometimes. That's why traders will use it. It's a change in the slope of the pullback of the trend. And if you break that, well, then obviously the slope is changing and prices could then break higher. Okay. So there are a couple of things to look at. Now, if I go back to a daily chart, it might even seem more obvious. You might even say, Mike, why are you worrying about a 30-minute chart? You're so close to this range anyways. Here's 55.22. Look how we only have to wait for the daily chart to break out above 55.86 to get a daily break. And where does that put us at? Right there, at those highs there. So couldn't we set up a trade right now with these kinds of parameters? The entry could come in here. Again, I realize we're ahead of earnings, but then again, gold has broken out too. It's at higher levels. That is a risk factor for sure. Earnings is a risk factor. We have some days ahead of that. But if we were to break out ahead of that time, we might be able to just make a quick little move up there and fulfill our measurement gap. So entry potential right here, a breakout, okay? An exit would be below this level. I got to put exit in here for that. Exit below these lows, okay? And a target right about there. That'd be our, actually, it's kind of it's a measured target, a measured move target off the gap, but that could be a target as well. Okay, so that's kind of a general trade setup that we can actually put the order in now and just put it in place in our paper money account to check it out. Before I do that, the measured move stuck out so well here. I want to do that first, but this is what the bull flag would look like. Off the bottom, pulled to the top, right? And I'm just going to duplicate this, and I take the pull of that move, which represents that upward run, and I just draw it off the bottom. Okay. What has the bigger target? Or the longer target. The bigger target is up here around real close to 66. We were down here with the measured move at 62. And all I can say about this, if it unfolds, it's a good problem to have, right? It's a good problem to have. Maybe it will run to one of those two. You can see that it's not quite the full extent of that run. In fact, if we look at this on a fib, I'll just pull up the fib over here. Let's click on this here. We'll pull it up to our high right at that level, and we'll pull it back down. We click again, and we click again. I was hoping it would show that, and it does. It's right at the 61.8. So one of the three key levels, well, that a lot of times traders will use. This is the 38.2 here, and that's our 50%. It's not showing just due to the tightness of the setup here. But that's a 61. So a 61.8% of the move is our measurement gap target. A full run around 66, and that puts us 62. A full run of the flag pattern puts us around 66. Okay, now you guys let me slow it down a little bit. That was a lot of information. But there was a lot going on with this stock and a few things to look at. But any questions on that thus far? Throw those into the chat. I did notice there's a survey in there. If you find this information helpful or useful, or whatever the case is, click on that survey. There's just 2 quick questions in there, comments as well. My manager looks at those. I look at those. I really appreciate any insights too that you guys might have. Kind of go from there. There was also mentioned in here a compression. You guys, we talked about that last week, right? The compression of price. Does that look like a compression to you? It really does, right? Look at the price data. It's so tight in here. I'm going to click over here just for the heck of it and put in the TTM squeeze because I did want to see it. I thought it was a great point brought up into the chat. It's still probably expanding because remember the Bollinger Band has to get inside the Keltner channel as we talked about last week. And so we didn't quite get, we're not quite there yet. Okay, there was a question that came up on the TTM, how I set this up to. I'm just going to hit this right now because I mentioned I would. But I'm going to take out the histogram, and I'm just going to put in the volume comparison right there just so we can see it. So notice we did have a little compression right here. That was perhaps a compression breakout. We might, if it drags a little bit longer, there's no doubt that it could go a little bit flat as well. Oh, looks like that they didn't see the survey link. That's odd. That's strange because I'm seeing it right there. If you wouldn't mind sending that out again, Cam, thanks so much for that. All righty. And good to see you, Dragon Rider, as well as the rest of you here. You guys, now, let me ask you a question. If you look at this, would you prefer to do something along the lines of, because there are earnings in here, and that could be a key consideration. I realize it is ahead of earnings, but a key consideration could be using maybe a short put vertical and just trying to collect income over that trade as well. So that is a possibility too. And that what that could do is it could give it more of a range, right? More of a reaction to the downside, for example. There could be a lower level, it could go sideways, it could go up as much as it wants, and you could still, perhaps be profitable on a short put vertical. That would be a consideration too if you didn't like earnings. But if you were okay with earnings, I'm going to go ahead and just set the trade up right now. We'll go ahead and do that. All right, so let's go over here and we'll set this one up. Now this trade, I'm going to just take a look at the high. We're going to be looking at a break above this level right here. And so, yeah, right up here at that point, about 90. Well, let's see. Well, what's the high? What's the high? It's 55.86. So 55.86 level right there would be the breakout, and then below here would be about, well, what we could do is make some adjustments. All right, and I'm going to show you how we might set something up like this on this. So we'll go to the trade tab, and we'll not do an options, although I did say some traders might look at options, particularly ahead of earnings, the risk factor there. Yeah. So some of you might be looking for that too on the earnings side for sure. I'm going to go over here just for now. We'll click this one, and I'm going to say an OCO bracket order. It's a buy custom order. I'm actually going to have, it's a buy stop limit up top, and I'm going to set that up at 55, just say 55.90. It's very, very tight, but we'll see if we get that break. Okay, so 55.90. All right, now our target is going to be upwards of, here's the thing, if we did 100 shares here, I'm going to do this. I'm going to do 200. Come on, click. There we go. 200 shares here. And so what I'm going to do is I'm going to, let's unclick it. So I've linked it for a second. I'm going to say minus 100 here. We're going to do this as an example trade, right? Actually, forget it. We'll do 200. That's okay. Yeah, I'm just thinking about a couple of different scenarios. Down below, of course, we're going to adjust this lower. I'll just do this on the chart, though. Let's go ahead and put this up as a good till cancel order. It's not going to trigger until we take out, until prices hit that level, okay? Let's go ahead and see what this looks like on the chart, or excuse me, just on the dialog box initially. So we got this all down. This took a little while, but there's a lot going on with the stock. I'm going to go ahead and just place the trade right now and put it in. Okay, now let's zoom in on it, and then I'm going to kind of adjust these out. They're so tight here. I've got to make some adjustments, but there's a 30-minute chart, and I said below this level would be the exit, right? Potential exit point, the stop order if it goes down to that point. And then we have up top here an adjustment I'm going to make and just pull this guy all the way up. We'll do it right around the 62 level, that measurement gap range, okay? Now I'd like to actually do this. I'm going to go ahead and just kind of lean over here and point this out. If I'm doing a true measurement gap here, this is the low, okay, up to that high point right there. Where's my target, folks? I'm going to right click, duplicate, drag off the bottom of that gap up. Whoa, did I come close? I think I came really close, but maybe just slightly off. Well, no, I think that's right about there. We'll just keep it there, but it's right at 62. Again, the other pattern is up a little bit higher if you want to do a full bull flag. I'm just doing the shorter term one right now, just due to the volatility in the market, but that's all set up. That's ready to go. All right. All right. So let's see. Okay, and let's go over here and point this out to a daily chart. Okay. So that's what that kind of looks like in that setup right there. All right. So other scenarios, other setups, here's a grid. One thing I was going to highlight here is we've been seeing as we look at across the board, all these different sectors. Do you guys notice over here? I'm looking for strength in sectors for, first of all, the upside. We'll look at the downside here just momentarily. But you know the one that ran back, it looks like the biggest off the bottom, right to the prior high. So this is pre-gap down, right? This is the pre-gap down that we had for the tariffs, and we're almost right above it. That's consumer staples. That can be a real hint to look into that group, because if collectively the whole group's doing that, you're going to see some stocks in that group, they're actually breaking higher as well. Everything else, if I just put it in red here, I mean, I'm just not seeing anything else break above that point, right? The pre-tariff announcements. You can see the highs that we were at previously. Yeah. And then finally the S&P 500, the bottom right-hand corner. Yeah, that nothing as well. The one that's right there, just a quick little way to see it, are the staples. And so that's what I'm doing just visually with my eyes, okay? Let's go back over here into it now. I'm going to show you a couple of these we could look at. MDLZ, Mondelez. Okay, notice that it has been holding its gains even better. Les, I think with Mondelez, isn't that Oreos? Wait, that's Nabisco. Do these guys own? I'm trying to remember. So there's Oreo. Oreo, yeah. Oreo, Ritz. So it is truly in the consumer staples group. It's been holding up very, very well. Despite the tariffs, people are still going to eat their cookies, their Oreos there. Look at this. This is the rally up. Sideways move. It's a little bit longer than a lot of times we look at, but a breakout here, I mean, a 10-day move is actually really quite large. Normally in this class, we're looking for the shorter term moves. You do have earnings here still as well. But let's just say, for example, a breakout, we're right at the trend line. If you can get above that level, perhaps it could start to extend. Do you see the flag pattern there? It's just like right in place. Oh, yeah, so they own Nabisco. Good catch. There we go. That's why Oreos. Yep, the Ritz. You guys are eating them right now, right? I actually had an Oreo today. That's funny. I had no idea I'd be talking about Mondelez, but there you go. So people I'm using myself as an example. People are eating Oreos during the tariff situation. I'm a case in point. Today I was doing it. Okay, a question was about that money flow on both of these, on, NEM and Mondelez. The money flow, really sharp, really, really strong. Let me show you what the money flow tells us on this. You see the high point over here at about 76? Now, this is the way traders will use money flow. And it nets out buying versus buyers versus sellers is what it tries to do. Buying volume versus selling volume. Look at that. We're above it now. We're above that level. We broke it right there. In fact, we broke it on that day right there. Well, right there. We broke it. And what money flow tells us is that we're going to break that level. Do you see the potential for a flag pattern developing here? Perhaps there are earnings here, but look at it. Okay, now I know it was mentioned in the chat. Hey, some of you all are, you like more of the potential for generating income. Well, when you're looking at, say, for example, a short put vertical, or even just a short put generally, you want to try to find maybe some of the strongest positions out there. Did we see the sector showing strength? Consumer staples. This is an Oreo type, situation. And hey, it's going sideways. It's a staples, in other words. And look at that. That's a bull flag. Now it's kind of dragging, but there could be a potential move if it breaks out higher here, or possibly a T1, a T2 retracement. It might hit T1 initially, but that's in question. So let's do this. If that's the case, what I would say is we could look at, let's come over here, look at the trade tab, because let's just say earnings is a questionable. Let's look at what we've got. remember when we're trading out about a month's time frame, excuse me, when we're looking at about 10 days, we might go out to about the next month. So here is the May actually at 31 days out. And notice the spreads over here. Not that bad, actually. They're not that bad. That one's bad. That's 30 cents. But even if we were looking at, let's say, for example, a 65, which puts us lower, and remember what the delta does. A delta simply measures, for every $1 move in the underlying stock, the price of the option will move up by the amount of the delta, this option range. That's a dime in here. That's not too bad in here. I mean, it's getting not great, but if we did a spread on it, it could be interesting. That might have a 33% chance of holding above 65 is how some traders will use this. Or they'll say their expectation is it's like, 33% that it won't go below 65. Another way to look at the delta. So let's just do this. I'm going to go ahead and click on the 65 and the 62. I'm going to hold the control button down at a 2.5 wide. That's all we've got on this. So 55-cent credit. We'll do a couple of these here. And, there is the order confirmation dialog box. That's what you're getting. Now, there might just be higher probability. I mean, we are looking at a 33 delta, and so it's not too high. Like I said, that's how some traders, their expectations are. It's, 33% chance that it might go below that level. But this is a way to potentially gain over a period of time. The max profit, if it does expire worthless, is 110. You can see the break even as well as the margin requirement at 390. I'm going to go ahead and send it just so we can get another one of these under our belt. But if we look at this back on the chart again, what this shows us is if the price of the stock maybe does one of these, just hangs around for a little bit, but holds above that 65, and there's a 62.50 in there, holds above the 65, it can go up, it can meander. If it can hold above there, what traders would be looking for is the expectation of an expiration of that short put and a collection, perhaps of that 110 over the next month's time frame. Okay, we did that one. We mixed things up a little bit, but this could also be, I'm going to go ahead and right click it too, for those of you watching it, because I might want to put one in just for us as well. I'm going to create alert withdrawing. And I'm just going to say breakout, perhaps, question mark. There we go. Breakout, question mark, and then you got it right there. Okay, really excellent money flow. Just a quick note on money flow. This is actually a higher high than over here, but money flow is even higher. So what this tells us is that smart money, it's also known as the smart money indicator. Smart money may be looking to get into Mondelez and some of these consumer staples, known as defense type groups. A couple of these others that are out there, I'm just going to show you that have been breaking prior highs. This is CrowdStrike. Double test. This is going to be one that I'm watching into this week, into next week. If we can get a signal here, a pullback and a breakout, we'll see what happens. Right there. And because that would be a new high, a higher high, I should say, and possibly a higher low if it begins to break out. CPRT doing something very, very similar, breaking a prior high over here. It's kind of in the development of the pole of the flag, perhaps, and so we're waiting to see if it will pull back and then rally higher from there. EA, I'm always watching this stuff. EA is interesting. We're right at that level, and it could break up and flag too, but there is this resistance point down here that is causing an issue. And my last one here, GD, General Dynamics, is right up to this point as well. So it could be fascinating sometimes with earnings too. You guys, we can get that earnings gap and go. And the earnings gap and go is something like this. You get earnings that finally gaps above those levels and then these levels of resistance and then takes off. So earnings could play a role here too. We shall see. Clear that off for a second. Okay. So let's see what happens. Now, on the downside, I wanted to look at AMD. AMD really showing weakness. So if we were looking at the possibility of a bear flag unfolding, folks, you know how many bear flags we had over here that fit into a 3 to 10 day time frame? More than my eyes can count right now, but I'm telling you, there was a lot of them. In fact, all the way over here in October, look at this. I mean, these are flags coming down. There's just so many of them. 3 to 10 days, galore. What's interesting here, now we do have earnings, but how many days ahead of earnings do we have? If I click right there, pull this guy over, it's going to count the days for us. We still got about 14 days before earnings. So if prices come up here, do you notice anything interesting? The staircase pattern, look at it come down right there, right to prior resistance. I've also got at that same resistance point, if I drew a line in there, downward sloping trend line off the tops. We've also got 100, a big round number. There may be a lot right ahead of this guy that's just saying, hey, we might break down and come down here. We'll see. But that's going to be a real interesting point to see if that does unfold. Okay. So keep an eye on that ahead of earnings. Now, it hasn't broken lower, but I'm going to put a trade on this if we start to close or trade below the low of our high bar right there. If we start to fade here, I'm going to put a trade on for us in this class that we can monitor in our monitor tab next week with all of these trades, and we'll just monitor them each and every week going forward. I've had to clear that up quite a bit, so I've cleared out the monitor tab now, so we're all set and ready to go relative to some of the other classes that I had. But if we break lower here, we will track this as well. So I'm going to go ahead and just, like I said, I can right click. It doesn't have to be a diagonal line. Breakdown. Question mark. Okay, but that's going to be potential for, and that's going to be maybe one that we'll be looking either as a, well, we'll be taking it to the downside. I'll put it that way. Okay, so we'll put it in there. By the way, look at volume on this. If I could just pull up volume. Wow, pretty weak, pretty weak. It's been down for quite some time, too. We're starting to round over right now, too. So indications if that volume could start to spill over, that could be interesting if it could start to dip a little bit, too. So we'll just see what goes on there. Folks, we do want you to follow us on our Trader Talks channel, bottom right-hand corner of the screen. Smash that, subscribe, hit the like button too. If you find this useful, helpful, I try to go through and make sure we're looking at that kind of information, as we go through for these sorts of swing type trades. Here is, well, it's right here. Here's the full list up top of the classes that we spoke of recently. This was actually the class right here that we were looking at in terms of, I was off by a little bit. Sorry. Yeah, last week was the downward, the bear flags with the tariff situation. But as you can see over here, the squeeze patterns, we talked about the compression. That would be the class you could take a look at. I'm just going to go ahead and, let's see. I'll just give you this link here into the chat. If that's the one, I saw it into the chat. You could take a look at it and go from there. This is the link to the group too, if you have any questions or follow-ups. But yeah, be sure and follow Cam and I on X, and then there is a survey link into the chat. I think that, did that come through? Yeah, it did. I'll go ahead and post that one more time just in case. But yeah, thanks if you're able to do that. All right, everybody. Well, we wanted to get through it today. We broke down a lot of key areas. We found some of the silver lining, perhaps, in some strength within gold. Gold itself breaking on into highs that could help to influence the miners. We broke that down into key detail. We also looked at the consumer staples sector as one that's really been a huge standout. Again, that one is, of all the 11 sectors in the S&P 500, that's the only one that's made it back to those reciprocal tariff highs, is what I should say, right there. And so that could be an interesting group to check out going forward. I would actually take a look at that. Some of those additional companies. We looked at Mondelez though. We did a potential trade on that as short put vertical. And just one quick note before we're done, I just want to make sure we capture this, but we did mention this, that I think we got through everything. Oh yeah, there's no guarantee that the execution of a stop order will be at or near the stop price. just wanted to make sure we had that. We did have one of those that, did have that stop order in there. So, all right, everybody. Well, hey, great seeing you all today. And I look forward to future discussions with you. Thank you very much, Cam, for your help in the chat. Folks, have a fantastic rest of the day. Look forward to future discussions. See you next time.